G'day ladies and gentlemen, welcome back to another Bitcoin update. I have not seen many people talk about this chart, and this will be the central topic of this video today. This is a very important chart, and not just because not many people are talking about it, but because of the importance of the trend we have forming here. It's not the usual trend we talk about, it's not the 4-year cycle theory, it is a separate trend, a trend based on the monthly chart, based on the 21 EMA. As you can see on the screen here, the blue line, the blue moving average we have on the screen is the 21 exponential moving average. We then have the monthly chart overlaid on top. Within the monthly chart, we have 3 distinct horizontal support lines and 3 distinct yellow horizontal support lines. So 3 red ones and 3 yellow ones. As you can see, the red horizontal support lines indicate the mid-bull market support zone for each cycle. I'm circling each one now so you can see on the screen. And the yellow horizontal support line indicates the bear market low for each cycle. So as you can see on the screen, I've circled the 3 of each time. So we've seen 1, 2, 3 distinctive bull markets. Okay, within those bull markets, we have 1, 2, 3 mid bull market kind of support ranges indicated by the red horizontal lines. And then we have the bear market support zones, which mark the low for Bitcoin, indicated by the yellow lines, 1, 2, 3. We then have the blue 21 EMA. Now, what you will notice about this chart, again, no one is talking about this. What you will notice about this chart is simple. Basically, around the same time, we break below the red horizontal support line in each cycle, right? In conjunction, we break down below the 21-month EMA. Okay, so we lose that 21-month EMA. And basically what this indicates is that every time we lose the 21 EMA on the monthly chart via a monthly candle close, we enter an intense bear market and we are going downwards towards the yellow horizontal bear market support range, which is the low. So generally speaking, and not generally, always, we lose the blue moving average, we lose the red line, and from that point in time, we enter the bear market dropping zone in which we are coming towards the bottom as per the yellow support line. We then bottom out on the yellow support line, and what you will notice is that once we get above the 21 EMA in the 2 previous cycles, okay, over here in 2015 and over here in 2019, we don't look back. The only exception is over here during the COVID drop, and obviously that was unprecedented price action. We cannot equate that, and we cannot kind of add that into the trend. We can act as if that didn't happen almost due to the fact that it was a black swan event. The trend is still secure. The 21 EMA, once we get back above it on a monthly candle close, offers major support, and we generally do not go back below it. If we're counting COVID, okay, we go back below it for a very small period of time. The fact of the matter is this, though. We have gotten above the 21 EMA. We've bottomed out on the yellow horizontal support line, just like the previous 2 cycles, okay? And we have gotten above the 21 EMA. As I said before, historically, we don't look back. Yes, we might come and retest it like we did over here, but we don't really drop below it, except for COVID. Again, it was an exception. Now look, right now, in 14 days, we will be seeing the monthly candle close. If we want to be maintaining this trend on Bitcoin, and it's a very important trend, if we want to be maintaining this trend, we need to be closing the monthly candle above the 21 EMA. We need to be closing the monthly candle above, as of current, 27.7K. It's extremely important that we do so. So we have 14 days, okay? We can look at the daily chart, we can look at the short term, and we can try to understand what's happening here in the short term and try to predict whether we're actually going to get that close. But it's quite difficult at this point in time because the short term is not giving us really clear indicators. We're seeing mixed signals. In fact, we're seeing some pretty bad signals coming from gold and the DXY, but it's really not as simple as that. It's not as simple as good and bad, and I'll tell you why in a second here. But where is Bitcoin on the daily chart? Well, look, it's not in the worst position. It is in descending triangle formation, and it is seeing some sort of rounding top formation. Some people call this a head and shoulders. I think that is probably one of the ugliest head and shoulders I've ever seen. I disagree with that. I would say it's a rounding top, which is still bearish. It's just a fine line, a fine distinction there. So I think that Bitcoin doesn't look good in that regard. But look, at the end of the day, yeah, we don't look particularly strong right now, but we're holding the support pretty strongly, okay? And we also have very, very strong support below us. We've looked into this support on multiple occasions here. Yes, we've rejected from the 50 EMA. That's not good. There's certainly indicators that are not very good for Bitcoin, but given the strength of this support zone here horizontally, going from 25.2K to 26.7K in that horizontal box, as well as the fact that we have the weekly Gaussian channel, the bull market support band, the 200-week SMA, all in that kind of support region, right? We can kind of assume, and the volume profile, by the way, the point of control and the volume profile on the weekly chart, we looked at all this 2 days ago. I'm not going to bring it all up now. The point is, that's a very strong support box. That green box there, very, very strong support. Even going all the way down to 24.3K, which is where the weekly support is, that's actually very strong support as well. So basically, what I'm saying to you is this. Yes, Bitcoin doesn't look particularly strong on the daily chart, but the point of the matter is, we've got very strong support all the way down to 24.3K. We've also got RSI uptrending support. This RSI uptrending support line in red here is stemming back from June 2022. It's been retested in November. It's been retested in March. And if we go down any further on Bitcoin, we will be retesting that zone. And that zone is very unlikely to break to the downside. You don't really see zones like that break to the downside very often. What you do see, though, and this is clear because you've probably seen it happen before, what you do see is RSI resistances break to the upside, and we also have an RSI resistance forming over here. So I would assume, right, if TA was working normally, I would probably assume at this point in time, we maybe go downwards a little bit further, maybe go down within this green box, and then come down, retest this RSI support zone, bounce off of that, come up and break that RSI resistance, and by that point, we'll be zooming upwards to the 30K region once again. That's what would make sense to me from a TA perspective. Unfortunately, it's not that clear and it's not that simple, and it's not that simple because charts, other charts, such as gold, such as the DXY, are complicating the matter. What is happening on gold? Gold is correlated to Bitcoin now. It's a fresh correlation. It's only been there for a short period of time. I think maybe a quarter and a half at this point. So what, 4 or 5 months? But it is correlated. And what we've seen on gold is a pattern of exhaustion. Now, it's got a larger triangle formation, a big, not even a triangle. It's just a larger formation here with a massive resistance line that's stemming all the way back here from 2020. But essentially, it's got a larger resistance line. It's just breached all-time highs recently. It was a short-lived breach, though. However, we did reject quite strongly. But we had an ascending channel formation. That ascending channel formation has just so recently broken to the downside, which is not very good. But it's not all bad news. And this is where I say it gets complicated. This is what I mean by that. It's not all bad news because even though we've broken to the downside, okay, we're also testing major support on the RSI. And even if that breaks to the downside, we've got a next major support zone on the RSI just below it. So realistically, if gold goes down a little bit more, Bitcoin would go down a little bit more. Okay, so both of them will go down a little bit more, but then they both reach major support zone, both on the RSI, right, for Bitcoin, and the price chart for Bitcoin, and on the RSI for gold. Okay, so it's one of those situations where it looks bad, but it really doesn't look that bad. And that doesn't really make sense, I understand that. But what I'm saying is, there's lots of support to catch us. Abundance of support to catch us, okay? DXY is a similar story. Now, DXY is reverse correlated to Bitcoin, which means when this thing goes up, Bitcoin goes down. Now, this is forming a rounding bottom formation and a kind of W formation as well. So this thing is bullish, means it's bearish for Bitcoin. Now, again, this could go up further, but then it's going to be met with a very strong resistance zone. So this could go up a little bit further, which would drag Bitcoin down a little bit further, and then we'd be met with a very strong resistance zone on this chart, which would bring Bitcoin up again because we get rejected there. We'd then bounce on the gold chart as well, and then we bounce on the Bitcoin chart as well. So again, I'll repeat what I said before again. It looks pretty rough, but the point is, if we go down a little bit further, we meet even more strong support than where we are right now. So there's very, very strong support below. There's a massive tramp. Imagine you're on a building and there's a jumper about to jump, but there's a huge trampoline below. That is basically where Bitcoin is right now. There's a massive trampoline below, and if we do fall, that trampoline will be there to catch us. And that's why I'm not particularly concerned about Bitcoin in short-term timeframes. What I am concerned about, and I'll bring it back to the start of the video, here's what I'm concerned about. And it's not even concern, it's just kind of watching. I'm watching this like a hawk. 14 days, monthly candle, 21 EMA. That is all that matters to me at this point in time. As of right now, short-term charts are irrelevant because they're very complicated. There's lots of support, but there's also lots of bearish indicators, and it's just like a battle between the support and the bearish indicators. We just got to see which one wins, essentially. But the monthly chart will kind of be the verdict, the referee to that battle. If we do close the monthly candle below 14, in 14 days from now, below that 21 EMA, that is really not good. And it's not good, not just because of a 21 EMA, but also because we would have formed an evening star formation on the monthly candle. What is an evening star formation? An evening star formation is simply this. It's where you see a very green candle followed by a doji candle with two strong wicks to the upside and a downside, and then a very red candle. And as you can see, if we do close this candle red, we would be seeing just that, an evening star formation, which is a reversal pattern. So what I will say to you is this, and I've said that exact sentence, what I'll say to you is like 5 times in this video, but here it is, right? Essentially, Bitcoin, daily chart, weekly chart, who cares, right? As long as we're above 24.3K, who cares? Whatever happens in the next 14 days doesn't really matter. So long as we get the close in 14 days from now above the 21 EMA, that will make sure the macro structure is fully intact. That's all there is to say about Bitcoin, guys. Before we end the video, I want to look at a few things. Firstly, the VIP group. This is not something I talk about very often in my videos, but I will talk about it now. You can go to the description below and you can click on the link there for the VIP information group, and you can see the VIP trading results. 2 separate documents here. You can't see one of them because my screen is covering it, but there's a document for Q1 and a document for Q4. Those are the trading results. If you click on those documents and open them up, you can see every single trade we've ever taken in the VIP group, and you can see the results of those trades, the profits and the losses. Let me tell you right now, it's generally very profitable. So go ahead and check out the group there, 100 USD for 3 months. This is the information page, and all the signing up details are on this group. If you go to the BitGet exchange, and again, a link will be in my description below, you can sign up using my referral link and then get a 15% trading fee discount to this exchange for life. This is the exchange, me as a personal, what would I call it? A day trader, right? I've been a day trader for many years. Ever since I was of legal age, I've been a day trader. What I'll tell you is this is the best exchange in the cryptocurrency market to day trade on, in my personal opinion. Lowest fees, non-KYC. What more do you need? Sign up using my referral link, help yourself, help the channel. And finally, the Crypto Academy, developed by myself and Mega Whale Crypto, who's a fellow co-analyst on Crypto YouTube. You can find his channel by typing up the Mega Whale Crypto on YouTube. We developed this course last year. It teaches people how to trade. If you want to learn how to trade, you can check out the link below. The link below will show you a website to this course. It's a website I'm showing you right now. And if you throw us an email at the email address listed on the website, we will throw you a full breakdown of what the course actually is, including a video tutorial and video walkthrough for free. So go ahead and do that. Thank you guys for watching the video. I hope you enjoyed it, and I'll catch you in the next one. Cheers.